If you are going to inherit some assets from your parents or from that long lost aunt that loves you, you've got to know about the step up. I'm Rizek, CPA and certified financial planner. I'm going to hook you up. So right now, under current law, if you inherit assets from a parent, let's say, stocks, bonds, real estate, business investments, assets that are held outside of a qualified retirement account like an IRA, then typically you don't owe any taxes. That's because of the step up in basis. The step up in basis works like this. If your parents bought a home for $100,000 years ago and now it's worth $500,000 and they were to go and sell that property, they would have a capital gain of $400,000, the appreciation in the value. Now let's assume they're not going to take the exclusion for $500,000 because it was their primary residence and they lived in it for 2 out of the last 5 years. Just bear with me. They would potentially have to pay tax on that $400,000 gain. However, if they pass away and you inherit it, then you receive the value at $500,000, and the basis, it used to be $100,000 when your parents were alive, but now it's going to get stepped up to $500,000. So if you turn around and sell that home, you don't have to pay any taxes typically on the value of that home. That's what we call step up in basis. Now, retirement accounts, like pre-tax retirement accounts, specifically traditional IRAs, 401ks, that kind of thing, they do not get a step up in basis because they already get special tax treatment on the growth of the account. But a Roth IRA, on the other hand, that's tax-free, so that is gravy, baby. Now, if you inherit that home in that previous example and you hold on to it, maybe you turn it into a rental or whatever, and it goes from $500,000 to $800,000, and then you go to sell it, you are on the hook for that $300,000 increase, that gain. And so you're going to be taxed on that because now your basis is stepped up to $500,000. So what happens if your parents are both still alive and kicking and they decide to give you that home? Then what happens when you're still alive and they're still alive and you get it? You inherit their basis at $100,000, what they bought it for. Then if they pass away the very next day, and you want to turn around and sell that property, you are on the hook for that $400,000 increase because you got their basis when they were alive. This is why it doesn't often make sense to name your kids as joint tenancy in common with your property. Oftentimes it's better just to put it into a trust and let your kids inherit it with that step up in basis. I'm Rizek, CPA and certified financial planner. This is education, not advice. Follow me for more tips.